Hi. The same way we dealt with PGBP, that is understanding one concept plus a few provisions based on a scenario-based question, we'll be dealing the capital gains in the same manner. Like we'll be doing one scenario-based question from our study material, institute study material, and a few other provisions. So now talking about capital gains, we'll first have to know what constitutes a capital asset for us to compute capital gains. So it says, the definition by itself says, property of any kind, whether used in business or not. Second is securities held by foreign institutional investors. Though the capital asset is an inclusive definition, or it's an definition which includes everything that is property of any kind, that is a generic definition, we'll have to check the exclusions from the capital asset. So first is stock in trade. Say land and building. Generally, it constitutes capital asset, whereas in case of a real estate business person, it is a stock in trade. So stock in trade cannot be constituted as an capital asset. Second, any personal effect. So anything that is for your personal use cannot constitute a capital asset. However, there are 6 exceptions to this general rule of personal effects. So if there are sale or transfer or any nature of transactions with these 6 assets, then it does constitute a capital asset. One, jewelry, archaeological collections, drawings, paintings, sculptures, or any work of art. And 2 other things which does not constitute to be a capital asset are rural agricultural land and certain bonds. It is gold bonds, 6.5 interest gold bonds and gold deposit bonds. So a quick check, if a person has sold or alienated within himself the asset, that is car, which was used for personal use, does it constitute a capital asset? Obviously no, because any personal asset, as read before, does not constitute a personal asset, capital asset. Only the 6 exceptions to this general rule contains capital asset. So the next is short-term capital asset. So we are just going to do short-term capital asset part of this alone, so that any opposite of this will be a long-term capital asset. So first one, period of holding, 12 months. So there are 3 kinds of assets which constitute short-term capital asset if held for a period less than 12 months. Security listed in a stock exchange, a unit of equity-oriented fund (UTI) or zero coupon bonds. Next is 24 months, unlisted shares in land or building or both. So if these 2 assets are held for a period less than 24 months, then it constitutes a short-term capital asset. 36 months. What is a short-term capital gain or short-term capital asset in case of 3 assets for a period held less than 36 months? Units of debt-oriented funds, unlisted securities other than shares, and other capital assets. So if we see here, how do we compute rate of tax? Rate of tax is like 2 kinds. One is 15%, the other is normal slab rates. So 15% is for STT paid asset, that is of first 2 in nature. That is a security listed in recognized stock exchange or in unit of an equity oriented one, only if STT is paid. Can unexhausted basic exemption limit be claimed against this 15%? Yes, it can be claimed. Chapter 6A deduction is not available. Next, this is the format we'll be following for all our capital gain chapter problem-based questions. So we'll have to read everything in detail now, like see based on each scenario, what constitutes a full value of consideration, what is the expenditure incurred wholly or exclusively in connection with the transfer. However, there is a specific exclusion which is STT. So for all these assets which is STT paid at the reduced rate of transaction is available. However, we cannot consider this STT paid as an expense for computing the capital gains. So there are few exemptions available under section 54 for the capital gain. Again, we'll see this when we see a scenario based questions based on the exemptions available. However, two specific exemption against like available against short-term capital gains are capital gain transfers of agricultural land, capital gains on transfer by way of compulsory acquisition of land and building of an industrial undertaking. So we'll see based on a scenario based in yet another video how to claim and what basis we can claim, what are the conditions attached to section 54 for claiming the exemptions. So as told before, expenditure, say on sale of a land or building, there might be a commission or brokerage paid to a person that can be considered as an expenditure incurred wholly or exclusively in connection with the transfer. However, STT is not allowed as an expense. So as told now, we'll deal with one scenario based question from our study material. So here is an example where for the goods lost or destroyed during a fire accident has been paid by the insurance company. So how to deal with such a scenario? Mr. A is an individual carrying on business. His stock and machinery were damaged and destroyed in a fire accident. The value of stock lost was 6,50,000. A certain portion of machinery could be salvaged. The opening WDV of the block as on 1/4/2018 was 10,80,000. During the process of safeguarding the machinery and in the firefighting operations, Mr. A lost his gold chain and a diamond ring, which he had purchased in 2004 for 1,20,000. And then they have given us a list of all the three assets which were damaged against which the insurance claim was received. So starting with an answer, you can deal it in two ways. Make a table, say deal with each asset, how should it be treated while computing the capital gains. So first point of consideration. So when we read the capital asset definition in specific, there was an exclusion which was stock. So stock cannot be a capital asset. So any claim received against it cannot be a capital gain or capital in nature. So this should be charged to our P&L.